Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Cheryl D'Souza and I'll take you through the top headlines that's there on the Economic Times as well as the Times of India. So let's get going with the top headlines that's there in the ET paper this morning. And first up, it is Garg saying that February 2018 circular led to a rift between FinMin and RBI. Centre is saying that may not be able to pay GST dues to the states. NPCI wants fee on e-payments back. You have 5G price may be cut to offer relief to telecom companies. Telecom still needs government help. That's the word coming in from Sunil Mittal. Exports freight show recovery signs in July. 100 million jobs in danger, MSME SECI tells Parliament panel. Prime Minister Narendra Modi to discuss MSME credit scheme with PSU bank heads. Innocent Bank to raise 3,288 crore rupees via preferential issue. And Mumbai sees lowest daily rise in cases in 3 months. All right, and those are the top headlines that's there on the Economic Times this morning for you. But let me get you all the top stories on the market side from the Economic Times. And first up, it is Sensex soars to 5-month high, but volatility index cools. You have Indian mark is most expensive after United States and Japan. Gold may rise up to 10% in 3 months. That's the word coming in from the analysts. Rural Connect gives Ultratech the edge in Q1. And Mindspace reads IPO fully subscribed. And from markets right on to corporate news, and that is Thierry Bolloré named as new CEO of JLR. You have Nestle India Q2 profit up 11% on lower taxes. Thai giant in talks with Goldman for renew buy-in. Dettol becomes largest selling brand in India. Godrej and Boyce looks to tap new opportunity. All right, and those are the top headlines that's there on the Economic Times this morning for you. But let me get you the top story that's there in the ET page, and that is the story that's there on page 1. This is the story that I'm going to talk about, and this is an interview of former Finance Secretary Subhash Garg. He said that the February 2018 circular issued by the Reserve Bank of India seeking to tighten the insolvency and bankruptcy code was a cause for differences between the two sides. Former RBI Governor Urjit Patel's recent book had suggested that central banks bid to plug the loophole in the IBC and actually go ahead and tighten screws on corporate borrowing led to his premature departure in 2018. The government wanted the circular reviewed. That is the word coming in from Subhash Chandra Garg to Economic Times in an exclusive interview, saying that the February 2018 circular created rift between the Finance Ministry and the RBI. He says, and this is the quote that is there in the Economic Times, that's saying, Mr. Arun Jaitley, you can't find a person better than him for initiating a constructive dialogue. Try to make that dialogue happen. That is the word coming in from Subhash Chandra Garg. He also said, unfortunately, when this did not take place, the government had to invoke something where the consultation can take place, he said, referring to the invocation of Section 7 of the RBI Act. So that is an exclusive interview in the Economic Times for you of Subhash Chandra Garg, who is the former Finance Secretary. Now let me shift focus to another story that's there on the page 1 of Economic Times, and this is talking about investors won't get credit of share sale for new trade. The practice is all set to end on August 31st. But what is this all about? And to take us through the details of this particular story, I'm joined by my colleague Jayesh. Jayesh, good morning. This is a story that's there on the Economic Times front page. But what is the story all about?
Good morning. So what this story actually talks about is an FAQ document that was released by the exchange over the weekend, and there was a lot of messages doing the rounds over the weekend itself What it actually means is that once a client actually sells off a particular share, he or she cannot use the proceeds until and unless they are credited to the account, which means that let's say, for example, if someone wanted to sell shares of TCS and buy Infosys of the same value, that will no longer be permitted after 31st of August, because the client will have to wait for T+2 settlement to happen. The proceeds will have to come into the client account, and only then the money that is credited can be used for further buying. So this is somewhat of an inconvenience that will be caused to the brokers, and a lot of brokers that I have been talking to over the weekend as well, they were quite unhappy because of this particular move, because it will actually reduce the volume and cause a lot of inconvenience to the broker itself and the client also, because now they will have to wait for T+2 days before they can actually use that money to buy into other securities. That is essentially what it actually talks about.
All right, Jayesh, thank you for taking us through that story. But let me shift focus now to another story that's there on the page 1 of Economic Times. And this is the story that I'm going to talk about. And that is, Center is saying that they may actually not be able to pay the GST dues to the states. This is a hearing before the Standing Committee on Finance that the Center has gone ahead and said this. Center said that the tax collections have plunged due to COVID-19 and will not be able to pay in near future. The Centre is said to have told the parliamentary panel that it may not be able to pay GST compensation due to the states in the near future, as tax collections have fallen due to economic slump on account of COVID-19 pandemic and the subsequent lockdown. So that is what the government has gone ahead and said, that they may not actually be able to pay GST dues to the states. These are all thanks to the tax collections that have declined due to the COVID-19 restrictions. Let me shift focus now to IndusInd Bank, and that particular counter came out with their earnings yesterday. But apart from that, the bank said that they will go ahead and raise 3,288 crore rupees by selling shares through a preferential issue at 524 rupees per share. But to talk more on this in details, in depth, I'm joined by my colleague Varun. Varun, good morning. Take us through IndusInd Bank. How much are they planning to raise at this particular time?
Right. Hi, Cheryl. Good morning. So 524 rupees per share. That's a slight discount to where it closed yesterday, 526. Investors, beginning with the fact that the Hinduja family themselves are putting money. So they're going to put around 800 crore rupees totally themselves. Now, the total issue is 3,280 crores. So 800 crores is 1/4 of the issue. So the family and promoters are saying 1/4 of the issue, we are going to ourselves invest. Then we open up the floor to other people, of which Route 1 Master Fund and Route 1 Fund have together taken around 950 crore. ICICI Prudential has taken 850 crore. Tata Investment Corporation has taken 300 crore. And AIA has taken 410 crore. So this is almost, 10% of the market cap of IndusInd Bank, 36,000 crore. So it's quite a large issue for them, and management seemed fairly confident on the call that it will see them through any near-term spike in NPAs, as well as manage their future growth expectations. It will also add around 125 bips to their capital adequacy.
All right, Varun, thank you for taking us through that important development coming with regards to IndusInd Bank. Now, let me shift focus to another story that's there on the page of Economic Times, and this is the story that I'm going to talk about, and that is a Thai energy giant PTT is in talks with Goldman Sachs for ReNew buy-in. But what is the amount that it is looking to buy in ReNew Power? I'm joined by my colleague Vivek to take us through the details of this. Vivek, good morning, friend. This is a story that's there on the page 1 of Economic Times about Thai energy giant looking to buy stake in an ReNew Power. So take us through the details of that.
Well, good morning. So it's a very important and a very interesting development. There were worries that post-COVID, given the fact that a lot of power companies could become quite unviable, especially you're talking about power companies in the renewable energy space. But what has actually happened is that you're actually seeing some amount of mergers, acquisition, you could call it even stake buys across the sector as far as the renewable space is concerned. Now, all of the companies that we're talking about not really listed in the Indian market, so you're not expecting any stock reactions, but you could have some amount of rub-off sentimental effect. So the news that we are looking at and that we are discussing is the company Renew Power, and the company management is a regular as far as ET Now is concerned. And what you're talking about is Goldman Sachs that has a significant stake in Renew Power may look to offload part of the stake to, as you rightly mentioned, Thailand's state-owned energy giant PTT Group. Now you're talking about they're looking at investing close to $500 million, and that would value Renew Power at a little over $2 billion. $2.2 billion is the kind of valuation that the ET is reporting. So Goldman Sachs is looking to unlock value. Renew Power again gets a significant and a long-term partner. So it's a win-win situation as far as what you're looking at as Renew Power, and more importantly, it could have a good sentimental rub-off effect as far as most of the renewable power players in Indian market is concerned.
All right, Vivek, thank you for taking us through the important story that's there in the Economic Times, that Thai energy giant PTT in talks with Goldman for Renew buy-in. Let me shift focus now to another story that's there on page 1 of Economic Times, and this is with regards to the 5G. 5G prices may be cut to offer relief to telecom companies, that is in absence of Huawei and ZTE. So the move will help offset higher costs for network gears from European companies. So the government may consider lowering the base price of 5G spectrum to compensate telecom companies if they have to shell out more for buying non-Chinese equipment. Officials have said that the government was aware that keeping Chinese vendors Huawei and ZTE away from India's 5G market may push up network deployment costs, and is thus open to reassessing the base price suggested by the regulator to make it viable for the operator. So if you see what a government official told Economic Times, he said the procurement procedures are being reworked. Surveillance has become a global issue, and companies such as Huawei and ZTE, whose ownership is questionable, and are going to increasingly find it tough to get contracts. So there you go. The government is looking to, this is as per Economic Times, the government is looking to rework and come out, slash the 5G base price, 5G spectrum base price for telecom companies, as they figure out that these companies may have to shell out more for buying non-Chinese equipments. All right, from 5G and from telecom, let's shift focus now to Nestle. That particular counter came out with their Q2 earnings yesterday. My colleague Vinny is here to take us through the earnings. Vinny, good morning. And how were Nestle earnings?
Nestle posted its Q2 current year 20 numbers, and they're largely in line with the ET Now expectations. Quickly taking you through the numbers, the revenue came in at 3,050 crores versus 3,000 crores on a year-on-year basis, and saw an increase of around 1.5%, and that was largely in line with what we were expecting. Even the bottom line, that's the profit of the company, also came in at 486 crores and saw a nice jump of 11%, mainly aided by the lower tax rate cuts which the companies are seeing. Now, margins of the company have given us a nice surprise, and they are up by 130, seeing an expansion of 130 basis points, and it's at around 24.5%, slightly above the ET Now expectations. We were expecting around 23.9% during the quarter. Quickly taking on through the other reasons behind these numbers. So, export sales also obviously saw a decline of around 9.3% during the quarter, mainly because of the lockdown situation. Now, overall, Nestle does benefit a lot more from compared to other companies, because they do have a lot of packaged food items, and they are a very trusted brand, especially in the in-home consumption trend which we are seeing among consumers. That really benefited the company, and that is what has helped boost the sales for products like everyday milk powder, milk portfolio, that's Nestle Milk, as well as Nescafe coffee, and Nescafe Sunrise, that has also really seen boost in sales. Also, Maggi saw a good growth by the end of the quarter when the supply chain disruptions were eased off, and the problems in those supply chain disruptions had been cleared off. That's when they started seeing a good boost in Maggi sales as well. Overall, obviously the lockdown did disrupt the sales of the company, especially because of the out-of-home consumption trend, which had been severely impacted. That surely impacted the company, but all in all, the company posted a decent set of numbers, much better in line with what we were expecting, and the company saw good growth in e-commerce channels as well of around 122% during the quarter. So surely this is showing some trend of how consumers are actually consuming and what were their preferences this quarter. All in all, a decent set of numbers from Nestle this time.
All right, Vinny, thank you for taking us through Nestle's numbers. And from Nestle numbers, let's see how Yes Bank performed in their quarterly earnings. And Poonam is here to take us through the details of their earnings. Poonam, Yes Bank, how were their earnings? Looks like their profits saw a drop.
That's right, Cheryl. In fact, we have seen a huge plunge in terms of the Yes Bank profitability. Look at the profit is just coming at 45 crore versus nearly around 2,600 odd crore on a quarter-on-quarter basis. In fact, a huge plunge in terms of the overall net interest income, higher provisions, as well as a hit in terms of the slightly other income has impacted the overall profitability. Net interest income is down 16.3% quarter on a YOY basis on the fact that yes, the advances has seen a degrowth during this quarter, although there is some amount of marginal improvement in terms of the margins, which have come in at 3% during the quarter. In fact, we're also seeing that the provisions have come down to 1,000 odd crore versus 4,800 odd crore on a quarter-on-quarter basis. If you look at the GNPAs, the GNPA numbers, of course, has risen during this quarter. The GNPA ratio stands at 17.3%. This stood at 16.8% in the previous quarter. The provision coverage ratio has slightly improved to 75%. But having said that, Cheryl, again, in terms of Yes Bank, and for that matter, any bank right now, we need to watch out for the moratorium levels, and the clear picture will come in terms of the asset quality only after the moratorium ends. So it should be another 1 or 2 quarters wherein we will actually get a clear picture in terms of the asset quality. If we are looking at the advances have degrown by 4% quarter on quarter. Deposits, still the deposit accretion has been decent at nearly around 11% quarter on quarter, but a huge plunge in terms of the overall profitability. Sharon, in terms of the capital adequacy, well, it stands at nearly around 8.6% right now. The CET1 is 6.5%, and we need to watch out for if this capital adequacy seems to be including the profits for the relevant period. So yes, we need to watch out for more in terms of the overall capital position of Yes Bank and the overall asset quality picture as well. As of now, a huge plunge in terms of the profits.
All right, Poonam, thanks for taking us through Yes Bank earnings in details. But let's shift focus now, and the other story that's there is that Prime Minister Narendra Modi will be meeting the heads of PSU banks heads. And what is the Prime Minister likely to take up in this meeting? I'm joined by my colleague Karishma to take us through the details. Good morning, Karishma.
Well, a confirmation on ET Now News Break, the story that we broke early today morning that Prime Minister Narendra Modi will be meeting stakeholders from banks and NBFCs tomorrow at 4 p.m. through a video conference. This crucial meeting will be focusing on a roadmap for the future. The meeting agenda revolves around discussions related to credit product, the financial sustainability and financial empowerment through technology. We also mentioned in today's story that ministries, participation of secretaries from important ministries will also be there. And interestingly, this is all coming in a few days after certain announcements have been made regarding the bad health of the bank, especially the RBI Financial Stability Report that spoke about the rising NPAs due to COVID-19 pandemic. And we've been, of course, following the kind of distressed condition of various sectors, be it aviation, be it infra, just because of the pandemic and the unprecedented lockdown that sectors have been suffering. And this crucial meeting could give rise and way to various important discussions and decisions that could be taken up. The the government has been on the top regarding the concept of self-reliant India. They've been pushing various policies and schemes in relation to also invite investments. Well, expecting important decisions coming out of this tomorrow.
All right, Karishma, thank you for taking us through that important development that the Prime Minister will be meeting the PSU Bank heads today. And definitely we'll be keeping a close watch on that particular meeting and what comes out of that. Let's shift focus now to COVID twist to soap opera, and that is the headline that's there in the Economic Times, the front page, that is Dettol that's claimed the throne. Vinny is joining in to take us through the details of that particular story. And Vinny, this is the first time, looks like it, that Dettol is the power brand in India.
Absolutely, Cheryl. This is the first time that Dettol has beat HUL's Lux as well as Lifebuoy, which was leading the soap market. And now finally Dettol has become number one in terms of market share. Dettol India did say specifically that, the Disinfectant soap brand has overall also global surge has been 62% and they've also expanded their market share by 430 basis points. So surely, overall the Dettol brand has seen a good improvement, and now they have become a power brand in India as well. Last year, if you go to see, Lifebuoy had around a 13.1% market share. It was leading over there, but Dettol seems to have taken over their share and seems to be the top brand now in India. Also, the company said that the Indian business has grown in high single digits, and they continue to see such high growth, especially in May and June. They have seen good growth as the lockdown started easing, and they remain very optimistic on the outlook. They're optimistic for growth, but the outlook is uncertain in the near term due to how the pandemic is going around. But overall, they have become the number one brand as of now, and that is a positive news for the company.